on quality power. We do have the company that reported its numbers, good numbers that came in from the company. We have Mr. Pandyan, who is the joint managing director of the company, to talk to us about the outlook of the company, order book. What are they expecting to see going forward? Mr. Pandyan, good afternoon. Thank you so much for joining us on the show. Surely a good set of numbers that's coming from the company in Q3. The Mehru acquisition, that has also supported the growth this time. So I want to understand, you've given a guidance of 700 to 800 crores for FY26. You're already at 666 crores. Aren't you being conservative? What is it that you are expecting in terms of Q4 for your numbers?
Very good afternoon, ma'am. Thank you for having me on the show. At the outset, I would like to thank you and our investors and the stakeholders. We're almost close to a year. I think tomorrow is 1 year anniversary of our IPO bell raising ceremony. And we have delivered over 100%. I think this is primarily because we have delivered upon the guidance, and I believe we would like to be conservative on the guidance. We have already upgraded our guidance. I think we should be expecting 900 crore plus for this year, at the margins already indicated.
900 crore plus is what you are expecting for FY26. And margin guidance also is what now? You're 22% plus, right?
I think the floor that has been given right now is 22% plus.
Okay, 22% plus. And Mehru acquisition, the margins are a bit lower, right? So how do the margins move for that? Have they also moved up in Q3, and are you expecting that to continue?
We believe we got them from about 5% to about 16% this quarter in about 9 months' time. Going forward, I believe there will be some improvements in Mehru, but there has been slight copper price and metal price hikes. So at this moment, we are holding good at Mehru's guidance. However, the primary businesses on high voltage power equipments and power electronics have been delivering excellent margins. I believe we are close to 30% on that. And that is how, in spite of all the averages happening, we are still at plus more than 22%.
Okay, and you are taking that 2-3% price hike anytime in this quarter, or when is that coming? Or because of the raw material pricing?
I believe we have factored in most of the bad things that happen because metal prices like copper and aluminium do follow copper, do follow gold. And once the gold prices start increasing, we had already seen metals start inching up, and that's one of the reasons why in Q2 we had held on to our guidance. But I believe the worst is behind us, especially on the metal side. So we do not expect any further surprises, either this quarter or the next one.
Also, you said that the new factory that you all are setting up has a revenue potential of 1,500 crores. What is the timeline of the factory being completed or coming in for the company in terms of revenue potential?
We are about 4-5 months earlier already. We are expecting the trial production to start in June of this year. It will take about 6 months for us to stabilize the factory with all the approvals, consents, HVDC audits, because this is a global HVDC facility. So there will be eventually global audits. We have already had some global HVDC orders. So that would take some time, but I believe by the end of the year, it will be fully running.
By the end of the year of FY26, it will be fully running.
December would be a good time where we would start seeing revenue spikes from the facility.
Okay. And so in FY27, what would be that revenue that will come in from this one?
I believe a little bit because only 1 quarter would see the full production output. The rest of it would be mostly in audits and approvals because this is a large facility. But I believe for the next year, we should be seeing at least 15-20% growth from our traditional businesses at least.
What is the sustainable growth rate that we could see for the company now with the acquisitions coming in all in, settled in?
We will have more. We have a lot of hunger. We are sitting on a lot of cash. So I would sit with my fingers crossed that we eat a couple of business next year. So at this moment, our guidance would be about 20% for the next year, and look forward to see how the year turns out.
Okay, so 20% growth in next year. You're expecting some acquisitions also, given the cash on the books that you're keeping an eye out on. Lastly, there was some concerns, and you had mentioned that there's a supply chain constraint for insulators in Q3. Is that easing out, or that will continue in the next couple of quarters as well?
It's been there for the year. We have stocked up a lot of insulators. We are stocking up on all critical items wherever we see them. One of the reasons why our working capital is getting stretched. But I believe next year or so, we see the supply chain to be a kind of a problem. But fortunately, most manufacturers across the world are expanding in the electrical ecosystem. And once capacity stabilize, I believe things should start easing out by FY28.
Okay. Thank you so much, for joining us this afternoon, giving us an outlook about the company. Hope to speak with you more often as well. Thanks so much for joining in, Mr. Pandyan. But on that note, we're going to slip into a very short break. But here's some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens.